Okay, we're getting started. Morning. Morning. For those of you who don't know me, I'm Paul Oliveri. I'm the construction practice leader and partner here at Grassi & Company. I want to thank everybody for coming out this morning. Not optimal weather, but you know, it is what it is. Matt McCullough is going to lead us through a conversation today on, I think, one of the hottest issues in the construction marketplace. When I joined Grassi 7 years ago, this was one of the first presentations we put out to the marketplace, and here we are still continuing to do it because the issue has not really alleviated itself, and that's obviously sales tax implications to the construction industry. Why is this a hot issue right now? Well, if anyone's ever read the sales tax laws, the real stereo instructions, there's a number of us in this room. I think if 3 of us read them, we'd probably walk away with 4 different opinions as to what's taxable and what's not taxable. So it's very ambiguous, it's very gray. It's a great revenue source for New York State right now. We all know about the financial difficulties, so they're continuously to pound the construction industry. My canned line and joke to contractors is, did you get your invitation from New York State to the sales tax stance yet? Usually I get a yes, we just went through a 5-year audit. Okay, they're coming back for more. If they're coming back, that means they obviously found something. If they're not, good job, they didn't find anything. And then if they say no, I usually tell them, well, when you get it tomorrow, please don't call me and yell at me because it's coming. And 9 times out of 10, within a couple months, Matt and I are out there having a conversation because that invitation to dances came. So with that being said, Matt's going to walk us through the intricacies of this topic. Again, we hate lecturing, we love dialogue, so feel free to throw questions back and forth. We have some Grassi people scattered throughout the room who have experience in this topic as well. I'm sure they're going to contribute, but let's have a nice dialogue, and hopefully we'll all walk away a little smarter from this stuff. That, again, thank you for your time. Thank you for being a friend and a client. Matt, that's time for you. Thank you.
Let's go. I'm Matt McCullough. I've been with Grassi almost 10 years. I'm a tax controversy senior manager. I handle all the sales tax audits for the contractor firm as well as IRS and corporate and individual state audits as well. I do specialize in sales tax, and that's what we're here. Excuse me, Charlie. That's what we're here to talk about today. Everyone's favorite topic, 8:30 in the morning. If there is any questions, please, interrupt me at any time. As Carl said, I want it to be a good dialogue back and forth, and let's get started. So here's our agenda for today. I'm briefly going to talk about sales tax Nexus, which is slightly different from income tax Nexus. We're going to talk about the revenue side of the sales tax. It's all generally geared toward the sales tax audit. So we're talking about the revenue side of it, the expense side of what you'll see on the sales tax audit, and then general audit issues that come up on virtually every single audit that we encounter with New York State. So Nexus, this is for sales tax. Now, an in-state vendor in New York State, if you are located in New York State and you're delivering materials within New York State, you're required to collect sales tax, unless it's for an exempt job. If you're delivering out of state, you're not required to collect New York sales tax. You may have sales tax obligations to the other state, be it New Jersey, California, Texas, wherever, if you have Nexus in that state, which means if you have some sort of physical presence in that state, whether it be employees, a warehouse, if you're renting property, if you have an office in that state, there's a number of different scenarios that can give you Nexus in a state for sales tax purposes. But here's the general rules for that for in-state vendors. Out-of-state vendors. Now, if you have no physical presence in New York State, you are not required to collect. Can I keep it?
Yeah, right.
You are not required to collect sales tax on materials delivered in New York State. This goes back to the famous Supreme Court case, Quill versus North Dakota, which gave us what's called the bright line test of what is Nexus and what is not Nexus for sales tax purposes. Back in 1992, it's still being used today. There's a Supreme Court case before the court this summer that is challenging Quill. It's actually a South Dakota case. And if that overturns Quill, dealing with online purchases that are made, which is obviously was not around in 1992, and if that is overturned, if Quill is overturned, a lot of what we're going over now will have to be updated. But as of now, Quill is still valid law. and it is being challenged. Like as I said, before the Supreme Court this summer, they're hearing the case, and so stay tuned for what's going on and what the result is of that. There may be compensating use tax due to New York State for materials that are used or delivered into New York State. So if you are a New York contractor, you buy something from New Jersey, the New Jersey vendor that you purchase from does not have any nexus in New York State, they're not required to collect sales tax from you. You bring those products into New York State, use them on a New York State job, you are required to pay use tax, which is self-assessing sales tax on those materials to New York State on your next filed sales tax return. This is what gets hammered by New York State to contractors. I see it on every single audit. I try to go over it with all of our clients, but whenever you buy something from out of state, nine times out of 10, they're not going to have, the vendor you're buying from is not going to have a requirement to withhold, so there's going to be no sales tax on those materials that you purchase from out of state. You get audited, they look at the invoice, no sales tax, you have to pay sales tax out of the state, plus the interest, plus penalties, which we always try to avoid. This is just a side rule. New Jersey vendor with presence in New York State and delivering into New York State can require that vendor to collect sales tax. That's just a small side rule. Similarly, the reverse, New York State vendor with presence in New Jersey can require that vendor to collect sales tax, both of those states. Now, failure to collect or to pay tax. If the vendor did not pay sales tax, if the vendor did not collect sales tax, the vendor may sue the purchaser, and the purchaser is obligated under New York State law, 1133A, to pay that sales tax. So, if you are a vendor, or if one of your vendors gets audited, and they did not charge you sales tax, and they end up having to pay sales tax on audit, they can require you to reimburse them for the sales tax only. That should have been paid. And if they took you to court, they would win on that. It's the ultimate responsibility of the purchaser to pay the sales tax.
What if you paid the use tax?
That's acceptable. Use tax is the same as sales tax. It's when you self-assess it, it's called use tax.
So then you don't have to give back?
Correct. You just have to show them proof that you paid it. That's it. Vendors, responsible persons may be held personally liable. This is extremely important. Responsible person is usually the owner or owners of a company. Can sometimes be the CFO, depending on their involvement with the company. If they have the ability to enter into loan agreements, they have the ability to bind the company with contracts. When the sales tax audit begins, the first thing the auditor gets to me if I'm handling the audit is called the responsible person questionnaire. And we have to fill that out and show who is responsible for remitting the sales taxes in the company. We try to keep it to one person, but they do have access to the income tax return to the auditors, and if they see there's 3 owners, they're going to pick up all 3 owners as responsible persons. And the reason they do that is sales tax, along with payroll taxes, are what's known as trust fund taxes. And trust fund taxes are taxes that are collected on behalf of the state by companies and then just remitted to the state. It's never supposed to really be your money. You're the intermediary for the state. What happens with a responsible person, and when this comes into play, is if the company gets audited, say they have a $100,000 liability, and the company goes bankrupt and out of business and disappears. The state will go after the responsible persons personally for that liability. That's very important that, yes?
Just back one, if the vendor and the customer are both being audited, can they charge you twice?
They're not supposed to, and I've had that happen once where we had clients, we were clients of the one company, and they were doing business with another company that was also under audit, and they had completed their audit. We just had to inform the state that they had paid on this item. It was the same thing. They took it away. The states, you know, according to their rules, are not supposed to do double tax on that, but you have to keep track of them.
Just to go back to the last slide, could you quickly just make a list for us as to what determines for sales tax purposes physical presence in the state? Right. Just a quick list, not a exhaustive one.
Yes. Physical presence in the state for sales tax purposes, if you have a office in the state, if you're renting a warehouse in the state, not a public warehouse where you drop off lumber and other companies also use it, you're actually paying rent to the owner of the warehouse. If you have employees that are working in the state doing more than just soliciting sales for your company. So they have to be, if you're contractor, have to be working on jobs in the state. Those are the three main items that will give you, if you had any of them, if not all three of them, if you have any of them, that'll give you sales tax nexus in that state. This is for New York purposes. It's very similar in most other states, just so I can be clear, that's for New York purposes. Yes?
If there's more than one partner, is the personal responsibility distributed amongst the partners, or
No, they go after
any one of them?
They go after all of you at the same time, and whoever they can collect from first, they'll collect the whole. If you have all of the funds and they levy you, they'll take it from you, and then you can sue your partners. The state doesn't.
One of the partners is a trust, and they go after the trust?
They go after the trust.
Actually, I'll just hold still around
Oh, sorry.
for a second. Check the webinar.
Which one do I have this? The forward?
Yes.
One here.
I'm just gonna check the webinar. I'm sorry to go over your slide.
No problem. We're responsible person, okay. And if you believe that you're not required to pay sales tax to a vendor, you need to.
Welcome to the webinar. You have entered as an organizer and may now speak to any other organizers or panelists on the line. When you are ready to begin the presentation, press the Start Broadcast button on the GoToWebinar control panel to allow all attendees to hear you. This system will notify you once you begin your broadcast. Welcome to the webinar. You have entered as an organizer and may now speak to any other organizers or panelists on the line. When you are ready to begin the presentation, press the Start Broadcast button on the GoToWebinar control panel to allow all attendees to hear you. This system will notify you once you begin your broadcast.
Misused as saying everything I buy and everything that I put into a job is tax exempt. That's not the case on the capital improvement. The installation labor is exempt on the capital improvement. That's what the ST 124 gives you. The materials are still taxable, unless it's an exempt job, which we'll get into in a little bit. Any questions so far? Going too fast, too slow? Everybody's awake? Good. All right.
Matt, real quick, if you don't have that ST 124,
Yes.
you pay the tax on the materials,
Mhm.
but you don't have that, are they gonna come in and say that we should have collected tax on the overall sale?
They're going to say that you need to prove on audit that it was a capital improvement. So I've done this where you actually go out to the job site and show them, here's the brand new building, that's capital improvement. Or here's the, with pictures, time-dated pictures that show everything was gutted, the total reconstruction was done, everything was permanently affixed. So if you don't have the certificate, it's not fatal to you that you have to pay, but you have to prove through other means that.
New construction is not considered capital improvement, is that correct?
No, it is.
Brand new building going up, materials aren't taxable?
The materials are taxable. This is the
Oh, the installation.
installation is the only thing
Right,
that's exempt from the ST 124 capital improvement. Right. Materials are always taxable unless it's an exempt job. And then sometimes they still are as well. We'll get into that. Revenue. So this is generally speaking now, and there's exceptions to each exception, and there's an exception to that exception in the tax law for everything I'm about to say, but we'll go over it as clearly as we can. Installation, repair, maintenance services done by contractors are all generally taxable, sales tax in New York State. You have to collect sales tax on all labor charges, collect and remit sales tax on all charges for material. Exceptions. Contractor need not collect sales tax from the customer if it's an installation of a capital improvement job, or if the customer is an exempt organization. The customer is an exempt organization, we'll get into the documents a little later. They're going to give you an exempt organization certificate, ST 119.1, I believe it is. And if it is a government agency, they will not give you a certificate, even if you beg and plead for one. They will never give you a certificate, a government agency. If that's the case, you're under audit and the auditor is not believing that the NCA of New York, New Jersey is not an exempt organization, which I get sometimes from them, they say, well, we don't know who that is. That's how ridiculous some of these get. This needs the front page of the contract, the signature page of the contract, and what I did is I printed out from their website that we're actually, MTA is owned by the states of New York and New Jersey, and therefore it's a government agency, therefore an exempt job. Yes.
So you're doing a temporary, I'm a defense business. You're doing a temporary fence for the SCA, okay, through a contractor. Is it taxable?
Yes. We'll get into why in a little bit.
Okay.
Yes.
But if I do it directly for the SCA, it's not taxable.
Correct.
What happens if the purchases are done through a buying agent, but everything is passed through to a government entity?
We'll get into that with the agency contracts a little bit. Yeah. So we'll go over the installations of the capital improvement. There's three factors that are required in order for something to be a capital improvement. You have to substantially add that to the value of the real property or prolong the useful life of the real property. What you're installing needs to become an integral part and affixed to the real property, and needs to be intended to be a permanent installation. It's not something that you're putting up at a job site that you're going to tear down at the end of the day. That's not a capital improvement. What you need to do as a contractor, if you're the GC, is you need to collect on every capital improvement job, if you can, the ST-124 certificate of capital improvement. That'll come from the owner. They'll give it directly to you, the GC. It'll have the owner's name on it. It'll have your name on it. You can give that to your subs, and they can use that to not charge it on the installation work that they do.
They're not going to charge the client, but they're going to pay the sales tax on the material.
On the materials, yes. And that's on them. That's not on the GC or on the client.
And they use that same cert for second tier and third tier subs?
Yes, for installation work, yes.
All the way down.
All the way down. What it does, it puts the burden on the customer, proves the capital improvement job, shifts liability to the customer. If you get audited, you have the certificate, a lot of times they just put it to the side and say, we understand it's a capital improvement job. Sometimes they question it a little bit. They are, as Carl said, getting very desperate, but it's helpful to have a certificate. It saves a lot of time. As I said, GCs give a copy to the subs. Let's over that. Floor covering.
Matt,
Yes.
you were saying the burden of proof falls under the contractor. Which one, the GC or the subs?
GC.
GC,
Yeah.
okay.
We went over the three factors of a capital improvement, the installation, floor covering. This is where the law starts getting strange and intentionally difficult. Carpet, padding, linoleum, vinyl floor rolling. We roll carpet again for some reason. Linoleum again, and vinyl tile. They're a capital improvement only if they meet the three factors: new construction, new addition to an existing structure, or total reconstruction of an existing structure. Otherwise, this is not a capital improvement. So if we are to change the carpeting in this training room, rip it out down to the concrete floor, put in new, and we put down any of those items, sales tax needs to be paid on the installation charges. That is not a capital improvement. However, as I said, there's always exceptions to the exceptions to the exception. If we were instead to rip this carpeting up, put down ceramic tile, hardwood, slate, terrazzo, marble, not subject to the floor covering rule. Those are considered capital improvements because they are intended to be permanent. Being that when you put the reason being when you put down ceramic tile, you put down hardwood, anything that you put down other than carpeting, linoleum, there's going to be some sort of concrete underneath that you put on and adhesive, thank you, to adhere that to the concrete. It would cause damage to rip all those up. So that's why there is this exception written into the law for these exact items. They write them in by name in the tax law. Ceramic tile, hardwood, slate, terrazzo made it in, and marble. Exempt organization is your customer now. We're still on revenue. All types of work for an exempt organization, capital improvement, repair, maintenance, they are not subject to sales tax when you're working for an exempt organization. The documentation needed, as I mentioned, it's contract between the parties for a government entity. Usually just the first page that lists both the entity, government entity, and yourself, or the GC, and then the signature page with the date on it. And if it's with a charity or with a church or of the like, you can get the ST 119.1, that's the exempt organization certificate from that. Yes.
So if you get a cert from the general contractor, and it's made out between, again, the SCA and contractor ABC, if he just gives me that copy, is that sufficient, or does it have to be made out to me?
No, that's sufficient.
That's,
Yep. There is the contract exempt purchase certificate, the ST 120.1, which you can request them to fill out. It has the same effect as having the contract. Yes.
If I have to buy a machine to install any of those items, is the machine tax exempt?
No, and I'll get into it a little later, the machine doesn't stay, even if it's bought just for that job, the machine doesn't stay on the real property that's owned by the exempt organization. You take it away when you're done, you have to pay tax on it. Even if you throw it away afterwards. Purchases of the expense side. Purchases of materials generally taxable, including those used for capital improvements, as we mentioned. Exceptions. We're going to see that word a lot today. On repairs and maintenance. Now, on a repairs and maintenance job, you're going to charge sales tax, typically, for a non-exempt job for a non-exempt organization. You're going to charge sales tax on the repairs and maintenance work that you do and remit that to the state. You are also going to pay sales tax on the material that you buy for that job. You can claim a credit on Form AU11, which is sales tax refund claim form, and get refunded to you the cost of the sales tax that you paid on the materials for that job.
say that again?
Okay. So you're doing a maintenance job, say electrical work, and you have to buy wire. You pay sales tax when you buy the wire, you install it, it's a repair job, you charge sales tax, collect it, you remit it to the state. You can file Form AU11 with New York State and get the sales tax back for what you paid.
And what if you have the sales tax invoice for that particular job and you never paid the tax on the materials? Same?
No, if you didn't pay, you have to show that you paid the sales tax on the material.
But then I'm paying it and taking a credit.
You're collecting it and then you're taking credit for what you paid.
Correct.
But it's
But
not
going in, if I know that I'm buying a certain amount of material for a job that's going to be taxable at the end, the end user is going to be paying tax.
Right.
Do I still need to pay the tax and take the credit, or can I just itemize that invoice saying this particular job, and we collected the tax from
You're supposed to, I know what you're saying, where you just net it together, that's what 99% of people do.
Right.
This is the law, of what you're supposed to do.
And on audit?
On audit, what you do does usually succeed. This is the cleanest way on audit, but they understand also there is, reality of life and how cumbersome that would be. This is very cumbersome, I understand. But, yes.
How do you handle purchases that are used both for repairs and maintenance and capital improvements such as spool wire? I'm talking about the big stuff.
Right, very difficult. Very difficult. We usually come to an agreement with the auditor based on the size of the jobs. That this percentage was used for capital improvement, this percentage was used, and that part's exempt, this part's not exempt. There's no other way to reasonably do it. That's usually what we do on audit.
Going back to the revenue side.
Yeah.
You negotiate a change order with a GC, okay? And we do it in the SCA's office. Okay, we go to the SCA change order unit, I'm with the general contractor, and it's a repair, it's a temporary job.
Correct.
By law, I'm supposed to charge the GC sales tax on the temporary fence, correct?
Your contract with the GC?
Yes.
Yes.
Okay. So in the change order unit, when I go through all the numbers with the SCA and we negotiate a number, I said, plus sales tax, we don't pay sales tax. I said, I understand that, but it's with the general contractor. We're not paying sales tax.
But isn't there an exception, I understand what he's saying, so temporary fencing is put around a job site.
Right.
It's a public protection feature. So the service of installing it, I don't think is taxable, but the materials that you purchase, I think, are taxable.
Right.
Correct, so
So
that's.
the temporary, it depends on what is.
Scaffolding.
Well, scaffolding
Scaffolding is exempt.
Yes, scaffolding is completely, we'll go over that later, that's completely exempt now. But this is fencing around a job, is it for safety purposes? Or is it just for?
Well, it's to determine the property lines and keep the construction on one side and,
To keep the
kids
public
on the
out of the
outside,
site.
keep public out.
Somebody put a temporary partition wall in a store while they're actively doing a store for renovation. We had a client put up a temporary wall.
Right.
They wanted to charge sales tax on the entire cost of the wall, including the labor for installation. I argued that it's a public protection feature. I should just have to pay sales tax on the actual purchases when I purchase the.
If it's for public protection feature, you're right, Bill, yes.
So, yeah, I think that's the exception that he has to look at is, he's gotta argue it's always a public protection.
Right, you have to pay on the materials for that, but since it's for, protection to keep.
So that means I shouldn't be charging the contract
No.
sales tax.
No, you should be paying it on the material.
Paying on the material that are purchased.
Whereas if you're renting that equipment, you gotta pay, sales tax on the rental. It's your equipment, you gotta pay the sales tax when you first purchase it.
So that's very different than what we've been doing.
Very different than what you've been doing?
Yeah. Not only that, temporary fences lately, we're running up $150,000 bills because they've changed the code. So these people are paying $10,000, $12,000, $15,000 in sales tax.
That depends on what the fencing is used, that's where the distinction comes in. Because if it's just put in to, if it's put in to keep, it's ridiculous, I know, to keep the public out from getting injured, then it's not subject to sales tax. If it's just put in to delineate what the property line is temporarily while there's.
On audit, who's going to determine that?
It has to be negotiated with the auditor, that's the problem.
Well, isn't the spec telling you what to do?
Nah, not really.
No, well,
It's pretty generic, and a lot of time there is no spec.
there's an OSHA.
There's a
OSHA requirement, right?
There'll be an engineer's drawing, say, yeah, here's a temporary fence, go build it. And there's really no.
If an item are hitting
no
hard,
contract language regarding. Right. What the purpose of the fence is.
if an item are hitting hard on audit, I can tell you that temporary fencing.
It's what, excuse me?
It's an item that they're hitting very hard on audit, temporary fencing, that you are collecting is a good thing.
So do I continue to collect?
I would. What Bill's talking about is where it's, what's that?
They're gonna pay it, yeah. It's not your money.
Well, I'll tell you, look, I have a client that, we're doing work down at the Javits Center, and we get into it, it's $100 and some odd $1,000. He goes, look, I spoke to my accountant, and he says, I don't have to pay it. I said, I spoke to mine. He says, I do.
Right.
Have your accountant talk to my accountant.
Right.
They're both crossing. All right, and then my guy got back to me, and he says, I spoke to the person he spoke to, and he said.
Any of them made?
My answer to that
No,
would be,
no,
my answer.
it's the truth.
My answer to that would be, if you guys can't come to an agreement, the guy insists on not paying the sales tax on the full charge, have a letter of agreement between the two of you. It's our understanding that this is a public protection issue. This is an exempt job, so therefore it's exempt from sales tax.
This has been an ongoing thing now.
That's right, protect you. Protect you and the owners go back to the GC.
We sit down, we talk about it, and we go through all these different gyrations, and there's no clear answer.
Right.
And at the end of the day, I know I'm gonna end up skipping stuff with the bills. Right. So that's how it usually works. Right. But what he's saying, if it's true, then really the client shouldn't be paying. And the numbers are big. It's not like $1,000.
No.
Numbers.
Well, the numbers, not only, they were also attacking temporary heating and cooling recently.
That was just a rogue auditor, but yes. Yes, that's,
You got those instructions.
that's more clear cut.
You got those instructions from somebody.
Right. Sure, that's true. But,
So no sales tax, right? On temporary heating.
There's not supposed to be enough. I mean, that's.
if, gotta clarify, if it's for protection.
Well, no, so you
But
don't want
in New York
temporary heating.
State, is it not always for protection, especially because of OSHA? How can you not fight that, or how can you not argue that point every time? I'm not a.
You can argue that.
I really don't wanna argue anything, because at the end, the guy's gonna say, just pay, and then,
Right.
we'll figure it out afterwards, and I'm just trying to avoid that. Trying to be proactive, I'm trying to be correct. I mean, I really don't want to get money. I don't get the money, so I'm just taking it.
Right, and the unclear answer is it's still gray within the state, that's why you got two different answers.
Yeah, I know, and the other problem is my competition doesn't charge it.
Right.
So that's a problem also.
It creates the unfair playing field.
Exactly.
Excuse me?
It creates an unfair
Yeah.
playing field.
So I just want to know what's right, what's wrong, and it sounds like we go back to the same gray area that nobody knows.
Right. It's delineated in the law that temporary facilities, excluding scaffolding now, because that's been handled finally by the state, are subject to sales tax.
Are subject
Are subject to sales tax. there's 10 different ways that people handle it, 10 different ways that you're gonna have 5 other guys that are gonna do it, you know, 2 will charge sales tax, 3 will not. And it's gonna be different each way on it. But that's an item that's, yes.
When you get outside the complicated city of New York, I'm sure some of this fencing, temporary fencing, is covered in town codes. So would that drive the non-taxability?
It could on the county portion of the sales tax, but to the state, we're just going by what the state rules are in the city. But it's just, and there's a number of items like that, but that's a very big issue.
Did they remove the language though, when they updated the regs about for public protection? Because that's why the sidewalk bridges and the scaffolding.
The sidewalk bridge, the language for the sidewalk bridge is in the reg, that's 541.8, does not include temporary fencing in the language.
No, but a public protection.
Oh, I understand. And the argument, I've had this argument with others, it could, because they specifically put in sidewalk bridges, scaffolding, other items, those they have excluded. But they did not, since they didn't specifically write in the fencing, they will not exclude it in a lot of cases. That's why.
So on audit, the guy's gonna say you should have collected the tax.
Yep.
And we're gonna make that argument if we did, that this is a public protection, then we're gonna argue with the auditor whether it is or it's not. Then he's gonna cite the law, says, well, it should have been included here, it's not, therefore it's taxable.
Correct.
And we're gonna argue with him and lose.
Not necessarily lose. There's a chance you can win. I'm not gonna say you're gonna lose every time, but they will refer back to the law. Depends on who you're dealing with. I mean, each auditor is different as well. That's the risk you take on audit if you're not going by letter of the law.
And then the last question, and I'm sorry to.
No, we want to have a conversation.
Who determines that it's a temporary fence? In other words, if I I'm doing the job, if I have a contract, and a lot of times we don't have contracts, it's invoicing, it's people we dealing with forever. If I just write, install 8-foot fence, blah, 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 PS 123, nobody, unless I write the word temporary on the invoice, how would the auditor know it's temporary?
The testing that they do on that is they would have to go to the site to see what was done, which they do. Was the concrete put in with the footings for the fence?
No.
They consider that permanent.
And if there's concrete footings, it's considered permanent?
Correct.
Even if it's temporary fence?
Well, they don't consider that temporary fence. That's intended to be permanent.
Really? No, not anymore. Not anymore. Because due to ever since the hurricane, they changed all the wind resistance and all that stuff. So the temporary fence now has become a very big structure, and it's engineered.
And it needs concrete now?
Many times.
Well, they haven't updated the code for that yet. We may have our answer now.
So if it has concrete,
footings,
it's considered permanent.
It's considered
But I
permanent.
go back to my other question. The audit comes in, I have 20 invoices for fencing.
Put on your invoice fencing with concrete footings.
And put public protection.
So unless I write the word temporary, and the audit doesn't feel like going out and doing a site visit to every job,
right?
Wouldn't the word temporary raise the flag as to is this taxable or not?
Yes.
Okay.
But they will, when they see fencing, they will ask the question, is this temporary or not temporary? And
But that's what we do. I mean,
we'll say
everything that we do is fencing.
Right, we'll say the fencing that we put in it has concrete footings. Oh, okay. They haven't changed the code for that. I can tell you that right now.
And shouldn't you have in your terms and conditions that if ultimately items that were not charged tax are determined to be taxable, the customer is responsible for that tax?
Doesn't protect you on audit, though, they still charge you.
No, not on the audit, but if you lose the audit.
Yeah, well, that's by law. That's by law. And again, if you do lose the audit, you can only get the tax for that transaction or transactions back. You can't get the interest back.
Right.
You can't get penalties back. It's just the actual tax on that transaction or transactions from the customer. Good for now? Okay, where were we? Purchases, repairs and maintenance. SC 120, resale certificate. Contractors are not supposed to use the SC 120 resale certificate. They're supposed to use the SC 120.1, which is the contractor exempt purchase certificate. Not a whole lot more to say about that one. Tangible personal property that will remain tangible personal property after installation. This is for installation charges only. Best example of it is when you install a washer or dryer. Those are considered tangible personal property. The installation charges on that is not subject to sales tax, not attached to the house or the building in any way. And I just had a washer and dryer put in, and TC Richards did not charge me sales tax on the installation, and I thanked the guy that installed it for that. So I do sales taxes for a living, and he looked at me like, you really didn't care? But I thanked him anyway, he did it correctly. I was definitely a dorky accountant at that. Purchases of materials are generally taxable, except it's got more exceptions on this. This is just what I just went over, the tangible personal property that remains tangible personal property after inflation, the washer dryer example. ST 120.1, contractor exempt purchase certificate, check box D, that's what will be needed for that. They actually have the form also as well, TC Richards, so they must have gotten orders. Contractors paying for installation service, exempt sale for resale, we don't need to go over that. And then expenses, purchases other than services that will be resold. So our third item, after repairs and maintenance and tangible personal property. This includes trash removal services and connections with repair services to real property. And the GC must collect tax from its customer unless the customer furnishes the applicable exemption certificate. This does not apply, and it is not taxable if you are removing debris from a capital improvement site. That can be trucked away tax-free. If it's a repair and it's a real property, the trash removal services is subject to sales tax, which I know is
Capital improvement is not?
It's not, removal of debris is not. So if you have the capital improvement certificate, they truck away all the stuff that you guys are carrying out.
That's exempt,
That's exempt, yeah.
Wait, can you repeat that again on stuff that you're taking out? What's the rule?
If it's a capital improvement job, the removal of the debris that was incident to the performing the capital improvement is not subject to sales tax.
Every type?
Everything.
Garbage, dirt, sand, rock, everything?
Everything that has to do with the capital improvement. So the ripping out of the walls, everything.
That includes the charge for the container, right?
Yes.
Everything that you.
And the service to drive it away and, yeah.
And is there a code on that?
There's not a code section on it, but it is generally accepted by the state. I've never had it as an issue on audit. I've done probably 300 audits over the years.
So when would your garbage be taxable?
When would it be?
Yeah.
When it's just, if you just have, trash from your office and you have a cleaning company come in and take it out, that's going to be subject to sales tax.
Okay, so my dumpster in my office is taxable?
Yes.
Okay. Yeah. So, but any construction I'm doing, whether it be tax exempt, capital improvement, now what if I'm charging the customer sales tax?
Well, it has to be either a capital improvement or tax exempt. A repair job would not be, it would be tax-free. You'd have to pay sales tax on that.
Even though I'm in essence, I'm charging the client sales tax on the overall project?
Yes.
Okay.
And what about when they're bringing it in? They're
Bring
bringing dirt in
to what?
to the capital improvement.
That would be part of the job.
As part of the job.
So it's tax exempt.
What are they doing with it?
So
Just doing
if-
dirt fill or?
Yeah,
Yeah, that's fine.
okay, but what about the trucking part of it?
Trucking is exempt. As long as the driver is provided trucking service.
So anything taken out, if I take it out myself as my own contractor, I take it out. I am not going to pay the dump tax on the garbage that I brought to the dump. If I hire him to bring his dumpster and take stuff away.
That's capital improvement job?
I'm charging
Yeah.
the tax.
Get on the other end, get on the other end.
Play with other people's money.
Is he charging me tax,
You should not.
even though he's considered a rental
He's not
on the
considered.
trucking?
There's a special breakout for removal of debris from a capital improvement site.
So anything in or out should not be
I don't
charged.
say anything, because there's always going to be exceptions, but the removal of debris when you're performing a capital improvement job, when you're ripping out everything that has to be ripped out from the building,
Mhm.
the cost of the truck that comes in, the cost to put everything into the dumpster or whatever, the dump truck, the cost of removal, that's not subject to sales tax on a capital improvement job.
And then the reverse again, coming back in, dirt, fill, all of that should not be taxed.
The dirt that the guy purchased, the
Well, the material you gotta
that
have.
contractor purchased on your behalf, he should pay sales tax.
On the dirt, you should pay sales tax,
On the
but
dirt.
for the delivery, there's not going to be a charge. But the material itself, there would be.
Yeah, for him to bring it in, he doesn't charge the sales. Right.
That's considered.
I get mixed. Some companies.
Some don't, not everybody does it the same way, not everybody does it right.
Because some of them will say it's a rental. The truck end of it is a rental.
You have to be the one keeping control of the truck. Are they providing a driver?
Yeah.
Then it's not a rental. It's a service they're providing. So they shouldn't be charging tax on that service, but they should be paying sales tax on the dirt, and they shouldn't charge you separately for the sales tax, but they can include that cost in their cost to you as an upcharge.
But if she hired a truck to go pick up the dirt and deliver it to the site, she would pay the sales tax on the trucking?
No.
Okay.
The only time you'll pay sales tax on trucking services is if you go rent a U-Haul and you're driving it. Okay?
When we were going through the sales tax audit, we had this exact situation brought up a lot.
Okay.
The auditor was just fixated on our GL account being called equipment rental.
Oh, you're
They
right.
told me to change it to transportation service.
Yes.
And then like, oh, okay, it's service. And that was it.
Yep.
Because they were so fixated on who had control, even though we were renting the truck with the driver.
Right.
They're like, oh, no, but it's an equipment rental.
If they see rental, how
Right,
can
that's
they rental?
what we have, we need yours, rental. So what'd you do?
Same thing with cranes, they're supposedly renting you a crane that they provide
I know.
I think those rentals in the name, so like.
Different laws, but generally not taxable.
not that.
But you change the name of your GL. Okay.
So transportation service.
Transportation service where a driver is provided is generally not subject to sales tax.
Any transportation, you have a piece of it, if you have a big bulldozer that you need truck.
But they're moving it from
site
site to
another
site. Right.
a non-taxable service. Doesn't matter where you're moving it to. It's a non-taxable service. Trucking, by definition, is not taxable.
Yes.
What about like scissor lifts or any kind of machinery like that you rent on a capital improvement job? Are those taxable?
Your employees are using it?
Yeah.
That's considered a rental, so that would be taxable. Rentals are generally almost always taxable. Very few exceptions on that. If any. Am I making it clearer or more difficult for everyone so far?
So Matt, in a change order situation, again, when you go to an agency, if I've rented equipment, I'm paying the sales tax on the invoice, the equipment.
Yes.
The agency should be paying that sales tax also, right? In other words, it should be part of they should recognize the sales tax in the change order, it's part of the change order.
Then you're gonna have that cost.
Correct.
Right. They can't separately be charged sales tax, but.
No, but they have to recognize.
I'm taking this out of pocket for me. Right. Yeah. All right, temporary facilities. This is used to be our favorite topic that we had numerous audits on. He's talking right now, but it was most of them were built. And the state went from initially, the tax law says the installation of, this is the sidewalk bridge example that we're talking about, not subject to sales tax. Sorry about that. What's going on? I skipped over one part that I wanted to go over. Guard services. Very, very, very heavily audited item by New York State. They started this up about 10 years ago. Any guard service that is hired for any job, capital improvements, exempt organization, anything, is subject to sales tax. All of them. And they always get hit on audit for this, my clients, always. And the guard service companies will close up shop and move down the street and open up as another guard service company a week later. They're never caught. They get to ask for this every single time on every audit that I've had for contractors.
And if you post it to a capital security, you're begging to be looked at.
Right.
If you post it to some contractors, then they'll have to stumble across it.
So this is one of the rare services that is taxable on capital improvement or exempt job. It's hit every single time. All right, as we explained before, Bill did briefly, temporary heating, electricity, plumbing, sidewalk bridges, and capital improvement sites. Excuse me, the installation of them are not subject to sales tax. Reason behind that, you're working in, winter months, summer months, you have to have heat or cooling, you have to have electricity doing your work at night, you have to have plumbing. Sidewalk bridges is the protection factor for pedestrians that we talked about earlier. So that's right in the regulations. I said the right one, thankfully 5.8 before. Scaffolding.
Hey, Matt, how do porta johns work now? Porta is still taxable either way.
Plumbing, if you set up a whole plumbing thing, then you're okay, but
They're not.
usually don't do that.
No, the installation is very key, electricity, plumbing, that's not possible.
No. Back to scaffolding, initially, the state treated scaffolding installation as subject to sales tax, the routine monthly maintenance is subject to sales tax, and the dismantling is not subject to sales tax. And that was all that the state went by for years. After many audits and trials and tribulations with the state, this thing is still sorry. With the state, we had long contested that the monthly maintenance should not be subject to sales tax with the state and that the dismantling. Some auditors were also saying the dismantling was subject to sales tax with that problem. And they were holding up a TSB from 1999 on the audit saying, this is what we go by, installation maintenance taxable, and it didn't mention the dismantling. Some auditors didn't charge it, some auditors did. Me and Bill worked on an audit where they were charging us for everything. There was a lot of lobbying going on by the scaffolding companies. A lot of our clients are having some issues with it, and we really wanted the dismantling and the maintenance written into the law, which was not done, but they did come out with a new TSB, which is a technical service bulletin, which is what auditors rely on as though it's the Bible, even though it's not even a tax law, but that's the rules they follow. Finally, they came out with a new technical services bulletin in 2014 that said that dismantling not subject to sales tax as long as it's a capital improvement of scaffolding. The monthly maintenance not subject to sales tax. And they also said the installation is not subject to sales tax, which we weren't even asking for. So we ended up getting all three. And Bill got his TSB to wave back at the auditor that we won. They called us back in 20 minutes and the audit was over. After we fought for 2 years with that.
What she wanted to do was charge us on the materials.
Yeah, that was the
materials were never subject to sales tax, as we charged sales tax for the installation. Eventually, they acquiesced on the sales tax part of it, and they turned around and said, well, you should have paid sales tax on the material purchases. I'm like, well, then if you're going to do that, I'm going to ask for a $2 million refund, because I charged sales tax to the client on all of the installation charges that now I shouldn't have. And the auditor said you can't do that. I'm like, why not? That we would have to give it back. I'm like, well, sure, the client will think I'm a hero. I was like, the statute's still open to them, if I can give it back to them. I was like, so you go back to your supervisor and say, either we're settling this for $200,000, which is the real number, this is what we believe is the sales tax, or we're going to go to a conciliation conference and ask for $2 million now. We're going to win. I got TSB that you keep waving in my face all the time. Why I got mine. And like you said, within 5 minutes, they called us back. Will you pay the check tomorrow? I'm like, sure.
So now the temporary fencing that goes on the scaffolding.
Yeah.
I'm in on all of this.
I mean, I'm always an advocate because they take that part out, Matt, as far as any temporary facility that's for public protection, they took that part out, or they just named this stuff as specific.
They just named this stuff specifically.
But did they leave the part in for public protection? Any temporary facility for the protection of the public?
No, it doesn't say any, that's the problem. It just says temporary facilities, and then it lists these, it doesn't have the fencing in there.
But the fencing on the scaffolding is not taxable, is that correct? If the scaffold company erects a fence, a lot of times what they do is they put fencing on the scaffolding so the kids can't get through the scaffolding, they don't climb on it or anything.
That's not going to be subject, because that's going to be considered part of the scaffolding.
If the scaffolding company doesn't What if I do?
I'd still argue that was considered, that's part of the scaffolding.
So
Going on to the scaffolding, right?
So if I have a job that has 1,000 feet of temporary fence in the playground and 1,000 feet on the scaffolding, I'm supposed to break it out, taxable, non-taxable? Okay.
The big winner today.
Oh, yeah.
One of the items I always tell people, when this thing comes up and it's an unfair playing field, one guy's doing it this way, another guy's doing it that way. If you have an association that you belong to, call that association to lobby the New York
That's what the
State.
scaffolding company
That's what
did.
the scaffolding
They got the whole thing.
The county hired to clarify. We need a clarification because this creates an unfair playing field.
And they went to Albany with it, and Albany, they were only arguing, correct me if I'm wrong, the dismantling and the maintenance, and they took off the installation too.
Yeah,
They took all three.
well, I think they got it right.
I think it's a good answer, but what I'm saying is they were just arguing for two, and they got an even better result than they were arguing for. Scaffolding lobby. And this is all we went over, even though I couldn't change the slides, I was trying to catch
I
up.
mean, ultimately, the state is paying the money anyway. So they're increasing the cost of the job.
This is all,
And then they
it's a pretty document, I just wanted to get us in. Originally installation, this is what they started to come out with. And this is the end result, 2014. I think we got the next day, the copy of it on the 24th. I remember the day. There was no tax, ended our audit. Okay, let's go over some audit issues. Now, on an audit, they look at, as we went over before, the revenue side, which is all your sales, which usually capital improvements, usually not a problem on audit. We're going to look at the expense side, specifically the material purchases, which is where the meat is for a contractor. If you're paying sales tax on your material purchases, for your taxable jobs, you're going to be in good shape for an audit. If you're not, and it's not for exempt jobs, there's going to be issues. They also look at fixed assets that you purchase, and this is any equipment or trucks, cars, anything essentially that you depreciate on your balance sheet. They're going to look at for the entire audit period, which is if you file sales tax returns, it's a 3-year period. For the statute, 3 years. If you don't file, they can go back as far as they want. They typically go back 6 or 7 years. If you don't file on an audit. For revenue and material purchases, they do a sample, which is usually a 3-month period, and they look at invoices for 3 months, and they come up with what's called an error rate, which is if you have 5 items you didn't pay sales tax on, they divide that by the total number of items that you had, multiply that by the tax rate, and they spread that over the audit period, assuming that you made the same errors every quarter. So the lower number, the lowest you can get that error rate, obviously the lower balance you're going to have. If you come up with an amount that's ridiculous, and I've done this, you can request a different period of testage showing what anomaly occurred in that period, or you can have them look at the entire audit period, which is just a lot of work looking at all the invoices, but you know there are ways to help mitigate whatever numbers they come up with. Interest cannot be removed if there's any tax due. There will be statutory interest due on that. Penalties are available, and we've been very successful. I've never had a client pay penalties yet. Now that I say it, I will, on a sales tax audit. When you do have penalties assessed, they charge you 14.5% interest, which is huge. When it's not assessed, it's 6%. So without penalties, it's a much, much better result. Briefly, just wanted to go over the Amazon case, which was back in 2008. This mandated, it's a New York State law now only, mandated internet retailers like Amazon.com to collect sales tax for sales to customers in New York, even though they had no physical presence in the state. Amazon appealed, they lost every appeal, all the way to the Supreme Court. The Supreme Court did not grant them certiorari, if I said that right, and they did not hear the case. So this is only a state case, does not affect anything nationally. There is, as I said early, when we began, a case with the South Dakota company that is with the Supreme Court. They did agree to hear that case. They're going to hear that this summer, which could change everything going forward. But this also mentioned the bright line test. It overruled the bright line test for New York purposes, saying that you must have physical presence in the state. New York says you don't have to have that because of the Amazon case. This is more for internet retailers, but it was an important case at the time, so I just want to bring that up. Questions?
Amazon, same as eBay.
Yes.
We purchase a lot of equipment and tools on eBay.
Yes.
Just have to pay the sales tax.
Correct. And if it's Amazon, they should be charging you. They lost the case, so every time I've seen them since 08, they've charged to New York customers. It's only to New York customers. They actually have reports that they print out for each state. They're big enough and wealthy enough to do that. Yeah.
HVAC equipment, on a capital improvement
Yes.
project is taxable.
Usually not, because it's considered attached to the building.
It is, okay.
The installation of it.
But the actual.
The actual equipment itself, you have to pay. Yes.
Only in capital improvement, not on tax exempt.
Correct.
Right.
Yes.
The material on the scaffold taxable?
Yes. First. Yeah. Yes.
The case that they're gonna hear, is that Wayfair?
I believe it is, yes. Wayfair versus South Dakota. It's similar to the Amazon case, it's just South Dakota was trying to make them charge sales tax, and it got appealed all the way up, and the Supreme Court decided to hear that one. I think because there's more than one case now, the Amazon case is out there, so they don't want to have, they always get concerned when there's different rules and different circuits. So, they're hearing that this summer.
You order wine from California, they charge you sales tax on it.
They do charge you sales tax? What is it, you're ordering it from, right from the winery?
I'm ordering directly from the vineyard in Napa Valley, and they're charging me New York State sales tax.
They must have connections to the state.
That just changed recently, because before you couldn't have.
Yeah, you couldn't ship wine into
Ship
New
wine
York unless you went through with this local distributor, and then, because I have a friend who owns a winery in Napa.
Okay.
So they came up with all kinds of rules on that, specific to the wine industry.
Okay.
Once they granted the fact that you could ship into New York.
That probably falls into that. I haven't dealt with wine at all. Wish I could deal with it more.
Yeah, because I used to get the wine from the marketing company.
Okay, they would charge you sales tax because they're in New York.
Right.
What, I don't know, Tom on the spot, whatever happened with the auditor trying to get sales tax on the road restoration material?
I don't know, I was gonna ask you
I sent all the info in to Joe Moore. He's the section head. He didn't get back in. Usually a good time.
We should probably shake that sleeping dog a little bit, find out what's going on. Because,
It's probably, I know the section head's probably done if you didn't get back to it.
I think it's one of the things that New York State has, and if you do any road restoration work, that's incidental to the work that you're doing, in other words, you work for a utility company, and you've got to put some temporary pavement down, or you've got to restore the road, all of a sudden New York State, and again, they take these positions, someone up in Albany has said, hey, we're going to take the position that road restoration, even though it's a public road, it's incidental to the work of a taxable entity, because Con Edison is a taxable entity.
Okay.
All right? So you're restoring the public road after you've done what you have to do for Con Edison. They're taking the position that you should be paying sales tax on the materials that go back into the road, because it's a repair project.
Even though the road's, owned by the municipality.
Even though the road is owned by the state.
Right.
And we have argued that one, that's going to start, I think that's going to elevate to a court thing, eventually, because they're looking at one of the.
A lot of that work going on too.
There's a lot of utility contractors out there now that are going to have to start fighting this, and this is going to set a precedent. So I'm encouraging people, don't cave, because then you're going to set precedent.
Right.
Same thing with temporary heating. I've told the GCs and the CMs that get this, got a couple of cases to where they're taking the position that temporary heating and electrical is a taxable service, meanwhile it says in black and white, it's not.
You've had it on more than the one case that we had?
I haven't seen it yet.
Oh, okay.
I haven't seen it.
So we appealed that one, obviously.
So that's under appeal.
Which, it's in the law. I don't know how we would lose the appeal. I'm not going to be arrogant, but it's in the law.
But the problem is the judge works in New York State.
Wait, Bill, you're saying you have a contract directly with Con Ed, NACRID, and you tear up the, New York City public streets because you're putting in new pipes for Con Ed, and Con Ed is supplying us with the pipes.
And Con Ed's got a direct pay with the state for their supply, for their material.
And they have an exemption certificate saying you can never charge them sales tax ever.
Right, because they're paying the sales tax themselves on a direct pay. They're not exempt. They pay direct.
Okay.
That's their arrangement with New York State. So any wiring or any conduit that you're supplied, because you don't buy anything. They give you everything to put in, right?
So the only thing we wind up buying is concrete and asphalt to go back to the street.
Right.
After we
To restore the road.
Mhm.
And
You need to pay on when you buy the concrete and the asphalt.
sales tax. Why?
It hasn't been because it's
Huh?
next to the street.
Oh, no, because it was going into the street, right?
Okay, going to the street. So, again,
That's where the battle is.
the battle lines are starting to be drawn by New York State auditors. They're saying that you should be paying sales tax on those material purchases to restore the road because you're not working for the state, you're working for a taxable utility. That's what the position they're trying to take right now. We're waiting to see how this pans out.
Should I do anything in the interim?
I wouldn't do a damn thing. I wouldn't do a damn thing because, again, if you start doing it, you're acquiescing to it, and that means, now to get the money back at a later date is going to be much more difficult to actually, beg for forgiveness later.
We've never paid the sales tax.
I've never seen any road repair,
You shouldn't.
unless it's a private road.
Right.
No, it never is.
Yeah, it
Only
never is.
guaranteed for the street.
There's very few private roads in the state of New York that actually get that kind of work done to it. Most roads become public domain, even in a subdivision. In the beginning, it may not be, but once the subdivision is turned over, it becomes a public road. So it's something to be aware of.
Great.
Any other questions? Hope it wasn't too confusing.
Is this online at all that we can?
We'll email it to everybody.
We'll hit the slide deck after, everybody. Any other questions?
I think we got them all.
I'm really glad I participated so much in this presentation. I think I did a fantastic job.
Your face is up there.
I know, look at that. That being said, we thank everyone for coming. Hot off the presses, another hot issue out there today is cyber. Every day we read the papers, we see Target, Under Armour, we see Fortune 500 companies breached. It's not just hitting Fortune 500 companies. We've all been breached, we just don't know it yet because our information has not been sold. You know how much it costs to buy a credit card online? It will cost me $8.50 to buy Jerry's credit card online. No, not that. I won't run up your bill, I promise that. But that being said, we're having an event on June 12th at the Porsche dealership here in Long Island in Freeport to discuss the implications of cyber security and cybercrime and how it affects all of you. So if anyone's interested, let your Grassi partner know, we'll get you that information. I just found this out, just want to bring to everyone's attention. That being said, thank you, Matt.
What industry is most affected by cyber?
It's agnostic.
I think it's anything.
If you have a social security number or EIN, you're a victim. Now that I've put everybody down.
They're also not just looking for personal information. They're looking to scam people. I don't know, the controllers and the CFOs in the room, you constantly get emails from your owner pretending to be them to set up a new account, and this is where I want you to wire the money to. And all of a sudden, you only fall for it once, I can tell you that. You think it's somebody pretending to be your boss. They somehow have that carnal knowledge of your interaction with with the owner of your company, and they know that you're the one that handles funds. Somehow they know that. And they somehow replicate the owner's email, and if you're not carefully looking at it or double checking it, hey, is this you or not? You responding back to that email won't help. You doing your own email, just like if you weren't expecting to see something in an email, don't open it. People have gone so far as put external email on it, they be cautious all over.
I got 3 emails last week from my boss.
Your boss, yeah.
Trying to get $98,000.
Just for information, on May 25th, the European Union put in the strictest privacy laws in the world. And those are going to come to the United States. So you better get ready for it. And if you can do some pre-reading, May 25th, I think it starts with a G, something, but it's the privacy laws for the European Union. They're the strictest in the world. And if you do business anywhere through there, or like I'm a high-level executive in a accounting association, we've just had to put that in worldwide. It's not that expensive, but you got to be very careful.
Thank you, Matt. Sure. Thank you for your time. Thank you for coming. Have a great day. I think the weather got a little better.
Financing agreement with the start.
Oh, wow.
Field water. So what was how are you? Oh, I do really like that every way. Anything that you buy, except for an exempt area. When you purchase something on an exempt job, it's being installed on any your property, it's staying on the job. And anything for exempt job, usually in schools, equipment.
Yeah, I know, it's stressful. Trying to have a spirit, I think, not all, I think one of the now required that they have to have 30. It's indoors. Now it's indoors. Much better argument than you still located in the example that I gave you. So I give you today, tomorrow, it doesn't matter. It doesn't matter. I'm not going to try to help. That's where the argument is big.